So I just wanted to do a baby pips course, right, for all the forest beginners, right? And I think I'm at a level I can do that, right? So if you're a beginner, this baby pips course is for you. So people always want to say they want to join mentorship, they want to join this, they want to join that, but I think the best mentorship is you learning it online, right? So let's go to babypips.com, right? Let's learn the basics of forex trading, right? So with baby pips, what you see is you have the whole interface, right? You need to sign in if you want. I have to sign in. So let me sign into my username already. Let me sign in with it, right? It's on this website. So for me, if you want to come into forex, this is the best site you can learn everything from, right? So how do you navigate through? Let's go to learn forex, right? So you start from beginner stage till you go to advanced, right? That's how the site is set. So let's go to start course, right? What are we doing? So you start with the preschool, right? So you learn what forex is. Let's go to the preschool, the basics, right? Basics. I'll just read through, brush through, and explain, right? So let's go. Let's start with what is forex, right? So yeah, with the first. Um. So with this, we have to simplify everything, right? So forex is the buying and selling of currencies, right? It's a global market that allows you to buy, sell currencies, or global market that allow you to trade currency, right? So with the basis of forex, you should know what you're doing. You're coming into forex to speculate, right? You're coming to speculate one currency against the other, right? You can speculate the Great British Pound against the US dollar. You can also speculate the Japanese yen, right, against the greatest British Pound, right? So that's what is on the first side, right? It talks about what forex is. It doesn't show you how to trade, though. It tells you how the institution that trades, and it tells you there are 7.7 trillion dollars, right? 7.5 trillion dollars of trading volume on the forex market, right? So with the basics, you learn that the forex market is the biggest traded market, right? But we have bonds, right? Bonds are huge before forex, but it doesn't dive into that. It just says forex is the huge market. Then we come to the New York Stock Exchange, then Tokyo Stock Exchange, then the London Stock Exchange, right? So that's what's on the first place, right? Then what is traded in forex? So as I said already, we trade currencies, we trade commodities, we trade indices, right? And futures too. So CFDs, right? We trade CFDs, right? So we hear what is traded in forex, the sepolar size money, specifically currencies, right? Because you're not buying anything physical. Forex trading can be confusing, so we will use a simple but imperfect analogy to help explain. Think of buying a currency as buying a shares in a particular country, kind of like buying shares in a company. The price of the currency is usually a direct reflection of the market opinion on the current and future health of its respective competitive economies, right? In forex trading, when you buy, say, the Japanese yen, you're basically buying the shares in the Japanese economy, right? You're betting that the Japanese economy is going to do well. You will even get better as time goes on. Once you sell those shares back to the market, hopefully you end up making profit, right? So when you buy the Japanese yen, you're basically buying into the shares of the Japanese economy. Why? So when you buy the Great British Pound, you're also buying shares in the British economy, right? So that's how forex is. We buy and sell currencies. But this is just the basics, right? You're not going to learn how to trade very well here. You're just going to learn what forex is, right? So we are this is the surface, right? We will dive into strategy, we'll dive into psychology, but not now. For now, you just have to know what forex is. So you can go to the sites and just learn, right? Just learn with the codes, right? All the currencies are placed on ISO numbers, right? So it's a coding. They are all in 3 digits. So as in Canadian dollar, you can say CAD, right? GBP for the Great British Pound, Euro, EUR, right? Japanese yen, you have JPY. Australian dollar, you have the AUD, that's Australian dollar. Swiss franc, you have CHF, right? Then the New Zealand dollar, you have NZD. Then the United States dollar, you have the USD, right? They are the major currencies. We also have major currencies, we have minor currencies, we have cross pairs, right? So this is just the basics. I just want you to know, when you come into forex, it's not about making money. It's about trading one currency against the other. You buy shares in the currency. If you know the currency is going to do well, if your strategy tells you to buy, you buy. If your strategy tells you to sell, you sell. So that's just the basics of it. So when you come, you know you buying and selling currencies. We are speculators, right? We don't move the market, we just ride the wave of the market. So when you're coming in, you should be ready to learn, right? So as I said, all the pairs have nicknames, right? They are ISO coding, right? You can say International Standard Organization, right? They try shorten the name to 3 standard codes, right? So if I want to say the Canadian dollar, I'll say CAD, that's CAD, right? NZD is for the New Zealand dollar. We have CHF for the Swiss franc. We have the USD for the United States dollar. We have the JPY for the Japanese yen, right? So GBP for the Great British Pound, right? So let's move to the next. Is it buying and selling currencies pairs, right? So yeah, as I said already, forex is buying and selling one currency, right, to the other, right? So we trade through brokers. Brokerage is let's say a platform, let's say a bank, right, which you deposit your fund, so they give you access to the financial market, right? Example of brokers we use, we have the SNES, we have the Just Market, we have the FBS, we have the Wanda, right? Like we have a lot of brokers out there, right? But only two I use is the FBS and the XNES, right? So as I said, brokerage is like the bank. You deposit your funds in there, so they give you access to the financial market. Without the brokerage, you can't access the financial market. You can't trade. So that's what a broker does, right? Yeah, let's move on. So with the majors, right? The majors are currency pairs of let's say the great powers, right? Pairs with great economies, right? We have some economies that are just great, right? And the crosses are pairs between the economy and itself, right? So if you have GBP NZD, can be a cross, right? So you can also have the AUD NZD, right? You can have the Euro NZD, Euro AUD, right? You can have them, right? So as it says here, it's a major, yeah, major crosses of minor currency pairs. So currency pairs that include two or major currencies except the United States dollar are cross currency pairs, or simply as crosses, right? Major crosses are also known as minors, right? While not as frequently traded as the major, the crosses are still pretty liquid and still provide plenty of trading opportunities, right? Don't confuse minor currency pair with the seven major currency pairs, all of which include the United States dollar against one of the seven other most liquid currencies in the world. The most actively traded crosses are derived from the three majors non-USD currencies, right? So you can go through all of this. These are the crosses, Euro crosses. We have the Euro CHF, Euro GBP, we have the Euro card, Euro AUD, Euro NZD, Euro SEK, right? That's a Sweden Corona, right? Norway Corona is also here, right? Coron, I can say Corona, Coron, right? So the yen pairs are also here, Euro JPY, GBP JPY, CHF JPY, CAD JPY, right? AD JPY, NZD JPY. Then we have the pound pairs, which says a lot, right? So GBP CHF, AD CHF, GBP CAD, NZD, GBP NZD, right? Then other crosses, AD CHF, AD CAD, AD NZD, CAD CHF, NZD CHF, and NZD CAD. Exotic pairs, no pairs are not exotic belly dances, which happen to be twin. An exotic pair is a currency from countries with developing or emerging market. Exotic pairs are made up of one major currency pair with the currency of an emerging economy, such as Brazil, Mexico, Indonesia, Poland, Chile, Turkey, or Hungary, right? Basically, an exotic currency pair include one major currency along with an exotic currency, right? The chart below contains a few examples of exotic pair. Wanna take a screenshot? We don't normally trade this pair, right? They're less volatile, so we trade the majors and some crosses, right? We don't trade the exotic pairs. We don't trade them, just the major we trade. So I think you have to stay out of them. You have to stay away from them because they don't normally move like that. Okay, G10 currencies, United States dollar, USD, New Zealand card, Switzerland, Norway, Sweden, Denmark. The Scandis, right? So the Scandinavians, right? It's a local usage covers the three kingdom of Denmark, Norway, and Sweden. Together, their currency are known as Scandis. Back in the days, this history, right? You need to go through this, right? But I think I need to be reading the summary, right? Because with this, it's just a basic you are going through. You need to know this before, right? So let's sum up Babypips. So I'll just brush you go to the summary, right? Just read the summary. Okay. There wasn't a good summary here, right? So the forex market size. So I said the forex market has the most volume, right? From the stock, right? New York Stock Exchange, So against all of them, the forex is the most traded, most volume market out there, right? And with other pairs too, the United States dollar is the most. I won't say the most power, but with the United States dollar, when you trade in it, the smart volume and it moves against other currencies very very well. Some pairs don't do that, but with the state dollar, it's massive when it moves against other currencies, right? So, how to trade forex? I said you need a broker first, right? Need a broker to currency trader spot, retail forex, CFD, spread bets, right? Currency futures, currency EFTs. You don't need to know this. This is just showing you the basics of forex, right? I need to brush through. We move to the next. We make money from buying and selling, right? So if you speculate, right, you need a strategy though. But as a beginner, you need to know the basics. You don't have a strategy yet. You need a strategy. So as time goes on, I'll teach most strategies on my channel. You better subscribe so we build this family together, right? So getting to know how the forex market work, we need a broker. And I said a broker is like a bank. You deposit your money for you to trade, right? And when the broker gives you an account that can give you access to the market with your initial deposit, right? So let's say when you deposit a $50, the broker will give you an account holding that $50, which you can risk on the market and make more money or lose more money on the market, right? There are two things that happen in the market: you make or lose money, right? So that's it. We speculate with a strategy, right? So that's it. And the broker also gives us leverage, right? You can have a 1:1, a 1:500 leverage, a 1:1000, a 1:2000. SNES give up to a leverage of 1:1 limited, right? And with that leverage, you can make a lot of money, or you can go to zero very very quickly, right? So let's move on. Let's move on to how to read the code. So the codes, we have the base currency and the code currency, right? The base currency is normally the currency that's touched, right? And the code is the one that it's traded against, right? Let's say GBP USD. So the base currency is GBP, the code is USD. So USD JPY, which one will be the base and which one will be the code, right? I need to bring this up. Give me a few. Okay, so with USD, right, JPY, so this will be the base, this will be the code, right? This is the first one and this is the one traded against this, right? So base, right, this is the code, right? I don't want this video to be very lengthy. I just want it to be very short. Go straight to the point for any beginner to just know what they're getting themselves into when they say they're trading the forex market, right? So let's get it done. As I said, this is the base, this is the code, right? Let me delete everything here. Okay, cool. So we move. I don't need to quit this, but okay, so we move on. So if there's a summary here, we read it, right? I'm just summing up everything to you guys. So base currency, the core currency, you have the bid price, the average price, and the spread is between this. The spread is the price between the bid and the ask, right? That's the spread. So the spread is bid minus it's the ask minus the bid, sorry. So 1.1053 minus 1.051. And there's something you need to know here, right? You see, all the currencies are paired. Let's say all the conversion rates are paired against two decimal places, right? So let's say $1, right, will be equal to, right, for currently it's equal to 10.50 Ghana cedis, right? So when you have a dollar, you have this. But with the forex market, we won't just see this 5 zeros, right? We'll see 500000, right? We'll normally see more than the 2 zeros you guys are normalized with. We see more than that. So we can trade this from we can have a buy signal, right? So we can trade this from 50. So we'll be trading this one will move to 510 before it moves to the 7000, right? So when it moves to like this, you guys only see this, but with forex traders we see more than 2 zeros behind it, right? So we call them pips, right? It's a pip move. So we see more than that. As you guys are just seeing, only those who don't trade, I won't say you guys, you're all welcome. Those who don't trade see this, right? So after them seeing this, we don't see this, we see more than this, right? So you're welcome. That's what you'll be seeing as time goes on, right? Let's move to the next one. So know when to buy and sell currency pairs, right? To know when to buy and sell, we need three stuff, right? One is I need to make this a little bit bigger, right? Sorry. So so to know when to buy and sell, right, we use three things, right? We have three type of analysis on the market, right? Analysis, right? So we have the fundamental, right? Fundamental, right? Or you can say the news analysis, right? News. Then we have the technical, right? Support and resistance, trend line, supply and demand, fair value gap. Everything is in this, right? They are all under technicals, right? Then we have the sentimental, right? Sentimental analysis is based on opinions of people, right? They just look at the market and think, okay, how the market is moving, how US economy is doing. I think I'm gonna buy this. So it's based on people, hope and fear, greed factor, right? It's also a strategy on its own, but in this channel I'll normally focus heavily on the technicals, right? Focus heavily on the technicals. We're not doing sentimental here, we're not doing fundamental here, we'll focus heavily based on technical, right? So let's go, let's delete this, let's move to the next. Okay, you know the pairs already. So central bank rate, okay, we don't normally need that, right? Let's go. So pips is just shortened for pricing points, right? So you can say points, you can say lots, you can say pipettes, right? Pipettes, if you want it that way. So I told you the normal people who don't trade only see the two of this, but as traders we see more than this, right? We see more zeros behind it. So we trade this from here before it gets to 1.11. Then we've seen all the zeros before it has gotten here, right? So what the normal people of the world see is they just see the price getting to 1 1. But we traders we report the price to this place, right? So we know when it's coming here and it gets here in our faces before the whole world sees it, right? So that's it. Let's move on. Okay, hundredth of a pip. This normally is not important, that right? You don't need to keep all this to your head, right? Let's move on. Let's move on to lot size. So your lot size is, let me see, your leverage on the market, right? So if you want to make huge money, you use huge losses. But so let's say if you have an account of 100 USD, right? You can use up to this. The other side you can use is from here to 0.01. Sorry, I need to, right? You can use, sorry for that. You can use 0.1 to 0.01, right? But with all the loss sizing, it's depend on the amount you can risk, the amount of money you make. The higher the lot size, the higher the money you make. The lower the lot size, the lower the money you make, right? And the higher the lot size, when you're losing, the higher you lose. The lower the lot size, when you're losing, you lose lower, right? So lot size is dependent, right? So let's move on. So it said is a unit of measurement measuring a transaction amount, right? So you need to know that. So we have the standard lot, that's the 100,000, mini lot 10,000, micro lot 1,000, nano lot 100. We don't really use this, right? But you need to have fair knowledge about it. You don't need them, but you need to have a knowledge about what lot size is, right? So let's go over lot size again, right? Says it's a unit of measuring a transaction amount, right? So you'll be using lot size a lot. Let's move to the next. Okay, as we said, spread is a price between the bid and the ask, right? So a bid is the price which you can see sell the base currency. Ask is the price which you can buy the base currency. And I said the base currency is a currency that's pegged against the quote currency, right? And it normally starts before the other currencies come. So we can have USD card, right? So what is the base? This is the base currency. So the base, right? And this is the code, right? Code currency, right? Right. And the price between this and this is the spread, right? The buying price and the selling price, the price between the buying price and the selling price is the spread, right? And you don't need them. We have brokers that have wider spread and some that have normal spread, but we don't really calculate spread here. There are some people who do that, but to me, I don't think I've ever calculated a spread before to take a trade. No, I just go in with my lot size, calculate the risk, and just trade. Right. So you need to know what spread is, right? But you don't need it. So you need to jump. Okay. So bid and ask explain. Okay, the same thing we normally said, right? Set the bid prices 1.10252. The ask price is 1.0264. The meaning of the bid. If you find this term initially confusing, it helps to remember the time bid and ask from forex broker's perspective, not yours. When you're buying, you pay what the broker is asking. When you're selling, you will need to accept what the broker is bidding. Right, we don't need this. Let's go. Okay, impress your date with forex jargons, right? Base currency, as we said already, is the first currency in any currency pair. The currency code shows how much the base currency is worth as measured against the second currency, right? So the core currency is a second currency in any currency pair. This is frequently called the pip and currency. And okay, so let's move on. Prepares bid price. The price at which the market is prepared to buy a specific currency pair in the forex market. Actual offer price as bid, quote conversions, transaction cost, cross currencies, right? Margins. Leverage, right? Leverage is the ratio of the amount of capital used in the transaction to require a security deposit, right? So let's go. So the type of orders we have is the market order and the pending order. So with the market order, when you enter, your trade gets executed fast, right? So when you say sell, it sells, but with the pending orders, it's like you're trying to target the market to reach a certain point for you to pre-order the broker to take the buys or sell for you, right? So with the market orders, you enter the market initially. So when I'm selling and I hit on the sell, it sells, right? When I'm buying and I hit on the buys, it buys. But with the pending order, when you use the pending order, the market waits, get to a certain point, then it trigger your buys or your sell. So with the pending order, we have the buy limit, we have the sell limit, we have the sell stop, we have the buy stop, right? Okay, they are even here, right? So buy limit, buy stop, sell limit, sell stop, right? And with the pending order, the order is executed at a later time as price you specify. So the broker is the one that trigger you in. You can just take the trade and go away. But with the market execution, it's instant. When you enter the trade, you are in that trade, right? And you're taking a loss, you're in that loss too. But when the pending order, it can get to a time, it won't get executed, right? So let's move on. I hope I'm not being boring here. I just want to go as fast as I can. Okay, so let's see this. So this is not the this is the pending order. With the market execution, when it buys for you. When it sells for you. But with the pending order, you specify, right? You set targets. The broker, the price reaches there, it triggers you in. But with the buy stop, the order plays above the price and the price keeps going high. So when you're buying and it gets there, it buys for you, right? With the sell stops, when you're selling, it gets there, it gets triggered, it sells for you, right? But with the buy limit, when it gets there, it's set below, right? So when it gets there, it tap in and it buys for you, right? With the sell limit, as in also the same. When it gets there, it tap in, it sells for you. I've never used them before. I don't use them, right? Because I have a strategy and I know my entry and exit. I won't use a pending order. I just don't know why. A lot of traders have a strategy that uses the pending order, but I don't use it. So I don't use it though. Okay, I think we have to finish the beginner's lesson. It's the same thing. You don't normally need that's a whole lot of, you can go through though, but you don't need it. Let's move to the next. So yeah, we're done with the preschool. Demo trade your way to success. So as I said, you need a broker. The broker I use is in the link description, right? I use SNS and FBS. That's the only brokers I use, and if you want to use them, you can, right? So you need a demo account, and with a demo account, it's not real money. It's fun money, house money, play money. You can play with it, right? So you log into the brokerage, you sign up with your ID cards, your national IDs, or driving license, passport. You sign in, they give you access. You create a demo account to paper trade, right? To trade the account in a way for you to learn the basics. And with the money you make, that's not your money, bro. That's broker money. That's demo money. That's paper money. You don't owe that money, right? So you create an account, you create a demo, and try to test your feet in the market. Try to buy, try to sell, see how, familiarize yourself with the app, right? Familiarize yourself with the app, see how it works, see how when you press the buy it works, when you press sell it works, before you step into the market. Don't go learn about the app with your real account. You're going to lose money and you might give up, right? So with a brokerage, it offers a demo for you to test yourself, familiarize yourself with the app before you deposit a real account, right? That's what the demo account is for. Can you get rich with forex? Yeah, there are a lot of evidence out there. There are a lot of free traders out there. People making enormous money with the forex market, right? You can be rich with forex, right? So yeah, you can be rich. All forex traders, and we do mean all forex traders lose money. Yeah, you lose money. Trading is not for the unemployed, those on low income who are knee deep in credit card debt, or who can't afford to pay their electricity bill or afford to eat, right? Forex trading is not a get rich quick scheme, right? There's high risk, there's high leverage, there's competition, psychological factors, right? Discipline, emotional control, risk management, all boils down into this. Forex is not easy. You are welcome, right? It's not easy. It's not easy, but with practice, with experience, you can gain mastery to it, right? So practice on a demo, learn your ways, familiarize yourself with the app, the software, use it, right? MT5, trading view, just sign up, right? So we have sections we trade, right? With my side, I'm in Ghana, West Africa, so we use the GMT, right? Greenwich Meridian Time, that's zero, right? Plus zero. So with me, there are 5 sections, right? In the market, we have the Sydney, the Tokyo, the London, the New York, and the no, that's set pipe book two. No, I've never heard of that. I just know of the Sydney, the Tokyo, the London, and New York. Right? That's what I know. That's the 3 sections I know. And sections might differ on your country, right? The place you're from, your section might differ. I won't tell you you have the same section as mine. My section will be different from yours, right? So sections also differ, right? Let's go. So the most volatile sections is in New York, right? London also is volatile, right? For the London pairs, that's the GBP pairs, right? So GBP USD, GBP JPY, GBP AUD, GBP CAD, GBP CHF, right? They normally see volatility around the London sections, right? And with the Australian pairs, they also see volatility during the Australian section, right? And with the Australian section on my side, it's around 9:30 to like 6, right? And the London begins from 6 to 11:30, that's when the New York comes in, right? Then the landing closes at 6 p.m., right? And the New York ride from 11:30 a.m. into the 12 p.m. Then it also closes around 9:30 p.m., right? So there are times, there are sections. Forex market is a 24/5, right? It doesn't run throughout all the week. We only trade Monday, Tuesday, Wednesday, Thursday, Friday, right? If you want to trade Saturday, you need to trade crypto, yeah, because they are 24/7 market. They move throughout the weeks, no break day, no holiday, right? So that's the with the section. A section must differ from the place you are, right? We won't have the same section. Just my New York will be your London. Your London might be my New York, right? So when can you trade forex? Tokyo section. Oh, Tokyo. Okay, I told you some pairs that move very well on the Tokyo section, right? So when you see the one with the JPYs, they have the most move, right? So they move on the Tokyo section, right? They have the most moves, right? They are volatile during that time. So let's move on. London sections are for the London pairs, right? They have the most volatile moves, right? So GBP, right? All the GBPs, right? They move very well during London. So let's move to the next New York section. So the New York pairs, right? USD JPY, USD CHF, GBP JPY also moved during that time, right? I just want us to be done. Shouldn't be too long. So the best time, we don't have best time to trade, right? But New York has a lot of volatility and a lot of news during that time, and it moves very well, right? Your setup can play around Asian section, yeah. You can trade around that time. That doesn't mean it's not the best time to trade. You can have your setup form during that time. You see that move, you can just check it out, right? But some wait to trade in London, because sometimes when you see the setup on Asian, there is normally a retest around London for the move to play out, right? Some traders wait for London section. Some trade when the setup are present, right? You get to know that too. Let's be done with this. Base days. So as I told you, forex is 24/5, right? Not 24/7. So Monday, Tuesday, people are saying Tuesday, Wednesday, and Thursday and Friday are some nice move, right? But to me, I see them to be normal, right? They all moves very well, right? When there is volatility, you can trade, right? There is not a specific day, right? So we're done, right? Let's do this based on the average pip movement per section. During which section that USD move the most, right? It's an European pair, right? But with volatility in it, we can say we can choose between New York and London, but let's pick London, right? To be correct. What time does the New York section begin? In late November. This is tricky. Late November. Okay, let's go with the GMT, right? Oh, that's incorrect. Actually, open close time are based on the local business hours. Okay, that was a tricky question. I don't know if it opens late November. That's weird. Which among these choices isn't one of the major trading sections in the forex market, right? It's nothing like Taiwan. Taiwan. Nope. When are the busiest time in the market? The whole day during the New York join section overlaps. Very busy, right? Like when the section overlaps, it's very busy. Name two of the main market participant during the same section: hedge funds, retail speculators, central bank speculators and hedge fund, commercial companies, and the central bank. I'll go for C. I'll go for D, sorry. The main market participant during the token sessions are the commercial companies, exporters, and the central bank. Remember, Japan economy is heavily export dependent, and with China also being a major trade player, there's a lot of transaction taking place on a daily basis, right? So approximately how much of the forex transaction take place during the London section? This is tricky, right? Let's go for the less here, not 61. Let's go for 43. Okay, we correct. When is liquidity highest during the New York section, right? When it overlaps with the Tokyo, both overlap. When it overlaps with the European section, right? Let's choose this. During the morning when it overlaps with the European section, right? So which one of the characters of the London section? Which is one of the characters of the London section, right? High cost, high spread, high volatility, high barrier of entry. It also has volatility, but not as that of the New York, right? So based on your average pip range per day, which are the best days to trade? Tuesdays and Thursday all day, right? Look at the chart average pips for the major for a day or the weekend to probably be best to trade during the mid of the week, since this is when most action happens, right? So Tuesdays and Thursdays, true or false, liquidity is lower when there are more people participating in the market. Liquidity is lower when there are more people. That's a false. When there are more people, there are a lot of volatility. What do you mean by that? A lot of chunk forex take place, lead to high volatility. Yeah. Okay, so which is the busiest time of the trading day? London New York overlap. Which day of the week has the largest potential for reversal? Which day of the week has the largest potential for reversal? Let's go for Wednesday. On Fridays, liquidity dies down during the latter part of. Oh, okay. So we had 10 over 12, right? Wow, you're good at this. Okay. The other question we failed was very tricky. Let's see. We're still here. Pipsology. Okay, same first players. I think you need, yeah. Okay, it's run by the central bank, the super banks, right? Goldman Sachs and the rest. So electronic liquidity providers also run it. Large commercial companies, right? Speculators, S, the retail, the hedge funds, right? Know your retail forex history. Okay, we don't normally need history here, bro. We don't. No, why trade forex then? FS trading unit, no commissions, no face lot size, low transaction, a 24-hour market. No one can corner the market. Leverage, right? Deep liquidity, low barrier to entry, free stuff everywhere, right? Why trade forex? The stocks. Forex is the largest market, right? Minimum deposit, like why not trade forex futures? Still forex or the liquidity, leverage, minimum and no commission, price certainty, right? Regulations. So let's move on. Margin trading. You don't need this, man. Let's. What is an account balance? You normally know when account balance is, right? What's in your account, right? like a bank account. So your brokerage gives you a trading account, right? And your money in it can be the account balance, right? Unrealized P and L. P and L is like profit or loss, right? So when you're in red, you're in a loss. When you're in green, you are in profit, right? So when you're in red, you're losing. When you're in blues, you're winning, right? That's it. So let's go to the next one. Margin. Okay. When trading forex, you only require to put a small amount of capital to open and maintain a new position. This capital is known as margin. For example, if you want to buy 100,000 worth of USDJPY, you don't need to put the full amount. You only need to put a portion like 3,000. The actual amount depends on your broker or the CFD provider, right? Okay. So they give you a huge amount to trade, right? So you can enter big lot sizes and stuff. Use margin. You must first understand the required margin is whenever you open a new position, a specific amount of required margin is set aside, right? Okay, you need to learn about margin. Equity is your amount of money you have, right? Your account balance, right? It's your equity. No, the running balance is your equity, rather. I don't think you need a free margin. What are you using free margin for? We don't normally use that as traders. You won't use that margin stuff. That make trading weird, but we just buy, so we don't normally calculate margins and stuff. Margin call is when your account don't have enough balance to hold your position, right? So you get a margin call. The broker can even close you out of your trade or will tell you to deposit, right? So a margin call is when your broker notify you that your margin level has fallen below the required minimum level, right? So you have to deposit unless you be taken out of the trade. That's why you use proper risk management. Stop out level. So stop loss is the amount you want to lose, right? So when we take a trade, this our entry, our stop will be here, our profit will be here. So entry, let me say if I'm entering 0.10, right? When the market goes this way, I'll be stopped out, right? I'll lose an amount of money. So the amount of money and the level is stop loss, right? So when it goes my way, it hit take profit, right? The amount I'll gain and the profit I'll have in my account, right? It's take profit. So that's it. Let's move to the next one. I think we don't need this. This make trading too complicated, right? We need stuff that makes trading easy. This makes it complicated. You need to do a lot of maths here. You don't need maths to be a trader. You need strong psychology, a strong back-tested trading plan for everything to work out. This a lot of maths here you can skip, right? Go to the next one. So I'll do the next lesson. I don't want this to be long. Let's move to the next lesson. I thought preschool was over. I don't want this to be long. All the plays I'm skipping, we don't need it. The relationship between leverage and man, we don't need that, bro. So you can read this throughout, but for me, you don't need it. How to avoid margin call? You don't trade huge accounts unless like you don't trade huge loss size that cannot sustain your account unless you get margin call like very fast. The broker will tell you to deposit, right? Okay, with the broker selection, I have two of my favorite brokers down there, you can just sign up, right? So the broker gives you leverage and gives you the chance to trade the financial market, right? Without the brokerage, we can't go straight to the liquidity, right? We can't just go straight to the market. To be very difficult, you need like a millions of dollars to do that. But with the brokerage, it's a minimum of 100 200 USD we can trade, right? So that's it. So the brokerage acts as a pathway between retail traders and the financial market, right? And liquidity, right? Yeah, we have some legit brokers out there and some are not, right? Okay, so I moved to kindergarten without knowing. So okay, we don't need this. So on our next lesson, we're starting with the type of analysis, right? As I said already, so we have technical, fundamental, sentiment, right? Sentiment is how people feel. Some just look at the charts and they just assume because people are complaining. I think this pair will do well when I short it, right? That sentiment, no technical, no fundamental, it's based on the feelings of human emotions, right? So on our next lesson we go to the kindergarten, then we work throughout it, right? So see you on the next one. It's about nyanforex. Please subscribe, right? See you. Peace.